Welcome to the It's Dumb Money channel, where we give you the intel you need to establish relationships with banks and grow your credit profile. In today's video, we're going to cover some soft pull or soft inquiry pre-qualification personal loan options. Now, the great news is that for the most part, they're all pretty much pre-qualified offers, and they allow you to go through and essentially see your offer, see the rate you're going to get, the terms, how many months you have to pay it off, etc., before you get a hard inquiry. Now, it's not always like that, but I'd say very high, 85 to 90% of them do this. It'd be very rare to see them hit you with a hard inquiry before you've even gotten to see the loan and the terms of it, right? And that's just how this market is, right? This is definitely a really, really great option for a lot of people, whether you're trying to rebuild, whether you're just trying to consolidate some debt, you're trying to do some essentially balance transfers and pay off credit cards. This used to be a huge bump up in your credit score and FICO 10 and some of the new models rolling out, not as much. I still think it's going to be insanely valuable. I just don't know to what degree in terms of a scoring standpoint that might change into. Required documentation across the board that you can expect to have together, which you should already have these things together. But if you don't, you're gonna wanna take some time and get this together before you even start applying for community bank or for credit union type credit cards, as well as personal loans. Like, they're all gonna ask pretty similar stuff. They're gonna want to have the basics, which is name, address, and the address should match what you've got on your credit profiles. It should match what you've already got on your existing credit cards. All that stuff, if you've moved recently, you should go and update, because it can throw a rejection, especially on a credit card, for no reason. With this here is just make sure it matches. So when I do basic identity verification, that all comes back fine. Date of birth, social security number, employment status, and you're gonna need at least the last 2 to 6 months of pay stubs, sometimes longer, especially a credit union or maybe a more localized bank. They might want 12 months of bank statements besides some sort of W, 1099 or W-2 that you might have. A lot of people still haven't filed taxes for 2021, so you'd have to provide them with 2020, maybe even 2019. And a lot of times you'll also need a bank account. This is not necessarily for verification, which is new with a lot of the fintech options. Really, it's just used for auto pay. Credit cards, if you want to do a balance transfer, you'll kind of need to figure out in advance, what credit cards you want to use. The pre-qualifications that you get, keep in mind that they stay good for like 15 to 30 days. So it's usually whenever you apply, it's good till like the end of that month before, something changes or you need to start over again. So if you need to take a step back and go and figure out which credit cards you want to use for a balance transfer, you can. And then some of them, like Upgrade, requires you to take a photo of the front and back of the driver's license within an app. This is becoming more common, and then also take a selfie. So it's all got to be done via mobile. You got to log in and use their third-party application process that allows you to snap a shot of the front, snap a shot of the back, and then take a selfie and upload those really quickly. Let's dive in. So here's by far my favorite and one personal loan company that I've had the best experience with. Very old, and they've been around for a really long time, and they kind of keep their standards the same across the board. They are looking for at least a 700 credit score. Marcus by Goldman is who I'm talking about. You'll see it on the screen right now. So they're looking for at least a 7, a 720 is good, 703, 710, all those work. I've seen them all work. And they will do loans up to $40,000. At a 700 credit score, you're not getting a $10,000 loan, you're getting 25 to 35. And then, obviously 750 and above, maybe if you had good numbers showing that your income's over 100K a year, you might squeak 40K. I think that's good terms, especially you get a lower APR if you do auto pay. You get a lower APR if you do a balance transfer as well. So like you use, I think 90% of it or 80% of it is for balance transfers. I'm not sure if they run this all the time, but the last time I did one, they ran this and I got a 1% cheaper rate. I think so it ended up being like 12%, which is insanely good, especially when you're looking at 23 to 27% APR cards, right? I like them a lot. Very standard process. Upload, a year's worth of pay stubs, a W-2 if you've got it, and you're good to go with Marcus. Outside of that, other factors, like I said, if you're into 700s and you got a range of installment versus revolving on your profile, you should be good, but I've heard of them accepting lower than that and with lower standards. Next, I'm gonna kind of cover the rest of them. And these are all gonna be companies that you should be seeing more. And you'll be seeing these in your Credit Karma recommendations. You'll be seeing these Wallet Hub, Experian, any other kind of tracker that pipes this stuff in. This is where the rest of them fall. And I do believe I have these in order. Yeah, I do. Okay, so I have these in order from what I think is the best to the worst, and your experience might be different, but I'm just sharing with you what I've got here. So Lending Club, I definitely think is at the top, and the reason why is because just looking at their stats, I've actually never done anything through Lending Club personally, but they've been around since 2007, and if you look, they've helped 3 million people secure over 60 billion. Whereas Prosper, which most people think Prosper is the biggest because they had really great marketing, they've helped 1 million people get 16 billion. Pretty big difference in terms of what both have done. Again, loans up to 40,000, APRs can be a little bit higher here, similar loan terms. All of these are going to be pretty similar across the board. The thing I'd tell you to pay attention to 100% is, make sure that there's no like weekly, bi-weekly kind of auto pay things. Make sure it's your standard monthly so that you can keep that in mind. And then the APR is really just the big thing to keep in mind. And if they're not going to tell you the APR or you don't really know what that means, then just do the math yourself. What's your monthly payment times how many months are you going to be in it? And that'll tell you total amount that you've paid in. And then you subtract the loan amount and the rest is interest. Okay, so pretty easy way to do it. And again, so they're all going to have slightly the same terms and things like that, right? Upgrade, gone through like the setup process. So I know what they're expecting, what they're requiring. They'll go through like 2 or 3 phases of documentation that they need. Again, this kind of newer process that they use is very similar to when PayPal started using the loan builder program and offering that, how you would have to go through and upload docs and then like wait a day or two and then they say, oh, okay, now we need this. So you're uploading the docs, somebody's taking a look, you're uploading your selfies, your driver's license, your passport, whatever, and somebody's looking at it and then pushing it through to the next step. And there's like, anywhere between 1 and 4 steps of documentation that you need to provide to close this out and actually get the loan. So they'll do up to 50,000. I think they're fairly flexible, especially with credit scores from what I've been reading and hearing. And then also too, just like personally with some of my score fluctuations, these offers were still in the background when I was in the 650s, 640s. These were still in my Credit Karma, etc. Again, I think they tend to look more at what you're earning and what your money is, because this is a newer kind of fintech. They want to know, what's your cash flow looking like. So again, similar terms here. They extend out way further to 84 months. A big difference you'll see between the different personal loan companies is the origination fees and any kind of other hidden fees. Again, just keep that in mind. Go through, make sure you understand what all that means. Origination fee it's right off the top. They're going to take that. Make sure you're understanding what your actual APR is and what that means in terms of how many dollars are you paying in interest, okay? Prosper, I got third here. I loved them for the longest time. I think that I originally used them when they first came out. Like they were like still, it was a pool of investors and like all these people had like profiles and it was a very kind of community driven thing. It's changed quite a bit. It seems like they're more so about like pumping out numbers. And I say this because I know people who have gotten loans through Prosper and the loan is up, let's say they paid it off early, right? $30,000 loan, they paid off like 2-3 years early. Didn't even get a, hey, congratulations. Didn't get, hey, we got another special offer for you. Didn't get a phone call, nothing. And then when they went to get another one, but check their rate again, like a couple years later, it like completely forgot that they had even gotten a loan with them before. There was no history. There was nothing that came up to show on the back end of Prosper, like, hey, this person's already gotten loans. They've got really good standing with us. They've got a good internal score within the Prosper system. I think that's a shame. These companies have an opportunity here to kind of create their own internal ranking system that can be laid on top and definitely can trump a lot of things like a credit score or, what your cash flow is looking like at the moment. Because if you already proved yourself to be, somebody that paid on time and paid a big loan, $30,000, $40,000 off, a year, 2-3 years early, then yes, you should get some sort of notation on an account. I'm sorry, but you should. That was kind of disappointing to see. And it just seems like with the call center flow and how you get follow-ups now with the company it's definitely big now. And I think they've kind of lost track of that community vibe that they had in the very, very beginning when they started in 2016, 2017. But similar thing, origination fees are all kind of looking the same. Loans up to 40, 50K. APRs are pretty similar to what you just saw above. And then finally, the only one that I can really tell you is slightly different is One Main Financial. They seem to be more of like a subprime, rebuilding your credit kind of thing. They've got some pretty wacky terms, and I'm guessing that's going to be based on your credit score. So if you've got some DROG showing up, maybe a bankruptcy, maybe you're making like 60K a year or less, they want you to sign over the lien or put them as position 1 on like a car and do things like that, like stake up real assets, which puts skin in the game, I guess. But there's obviously some serious downside risk to that you should be aware of, and don't be so excited to, like, if you're in that position and you feel like nobody's giving you money and then you finally get an offer for like 5 or 10K, the interest has you paying back 3K in interest, and then they want you to throw up your car to get the loan. That is just not worth it to me. So anyways, loans up to 20K here, 18 to 35. So the lowest you'll get is about 18%. So again, that kind of speaks to, hey, this works more of like a subprime. Origination fee, 1 to 10%. Again, to have a 10% clip right off the top, and then you're at, let's say 25% interest rate. I mean, that's a lot to take off the top, and you're not getting big loans here. Let's say it's just a 5K loan. What are you gonna end up with, 3,500? That's not a really great option for me. I want you to be familiar with that. But this whole page, you can check it out. It's gonna be in the description below, and you can go through all this. None of this is affiliate links. I just wanna be crystal clear. These are just link trackers, so we can just see, how many people are clicking through it, what's going on there, and what seems to be the most popular, but none of them are actual affiliate links or relationships in any way on this page. So anyways, the link will be there for you underneath this video. Thank you so much for checking us out. If you like this video, share it with a friend. If you know somebody who's like looking at the personal loan space right now and really doesn't have a clue, this will give them a great step forward. We even list like which bank backs each one. Web bank is really, really big and popular. These are all things that you need to know and will allow you to make a better decision. So share this with a friend, comment below, hit the like button, help us get this going in the algorithms. And if you like it, subscribe. And we'll see you again in a video real soon.